Welcome back to Future News. Now, something strange is happening in the world of money and financial markets. The new treasury everyone wants isn't gold or cash, it's digital, it's Bitcoin. And it's not just the tech sector or Silicon Valley. Massive corporations and even governments are quietly building up huge Bitcoin stashes and passing congressional legislation. This is no longer a fringe investment, it's a strategic move in a shifting global monetary order. Why, you might ask? It comes down to trust, or the lack of it. People and institutions are losing faith in traditional forms of money. Dollars buy less every year, and global tensions make the future increasingly uncertain. So they're looking for a lifeboat. The decisions being made today will shape how we save, spend, and define value tomorrow. It's akin to silent revolution. No shots will be fired, but the financial world is being shaken, there's no doubt. For a growing number of powerful players, Bitcoin is the key to their long-term security. This is a deliberate and calculated shift of wealth into an emerging asset and global network that no government can control or devalue. We'll pull back the curtain on who's buying, why, and what it means for you and your family. When the big players move, the rules of the game change for everyone. Bitcoin was once dismissed as a fad, a bubble. But those days are long gone. In 2025, the real story is institutional adoption. Public companies, pension funds, states, even sovereigns are systematically accumulating Bitcoin. They're treating it as a neutral reserve asset, a shield against an uncertain future. This is a fundamental change. Bitcoin has moved from the financial fringe to the center. When major companies put billions into Bitcoin, it's not a whim. It's a calculated bet against the instability of traditional currencies. These moves are public, not secret. Bitcoin is now digital gold, a safe haven in a turbulent world. But it's also a bet on technology. The blockchain is seen as the financial infrastructure of the future. Holding Bitcoin is both defense and offense, protecting assets and positioning for what's next. The debate is now over, and the most powerful entities have already made their move. BlackRock's IBIT Bitcoin ETF is now the fastest growing ETF in history, reaching $70 billion in assets under management in just 341 trading days, and beating out literally thousands of other ETFs by an extremely wide margin. The question isn't if Bitcoin will be part of our financial system, but how big a part. Early adopters are positioning themselves as the new financial leaders. The era of strategic accumulation has begun. Let's look at some of the companies leading the charge. Though there are many, the most famous is, of course, MicroStrategy, led by its CEO Michael Saylor, who started converting cash reserves into Bitcoin in 2020, following the response from the COVID-19 global pandemic. Today, they hold almost 600,000 Bitcoin, currently worth tens of billions, and accounting for over 2.8% of the entire supply. Saylor's logic was simple. Cash is a melting ice cube, and inflation eats away at savings, so Bitcoin is the perceived escape hatch. A static ledger weighed against one that is designed to expand in infinitum. Then came the giants. Tesla made headlines with a $1.5 billion Bitcoin purchase years ago, validating the strategy in the eyes of many. Even GameStop, after its meme stock saga, diversified into Bitcoin to protect its capital. Now we have a slew of others racing in. Metaplanet, Meitu, Immutable Holdings, Mode Global Holdings, the list goes on and on. As of mid-2025, there is a shocking 151 public firms holding Bitcoin, a 135% year-over-year growth rate in corporate holdings. Why? Fear of inflation. Central banks print money, making each dollar worth less. Bitcoin's fixed supply of 21 million coins makes it a hedge. No government can dilute its value. It's also about being ahead of the curve. CEOs see a digital future, and holding digital assets gives them options. Billions of people around the world are still unbanked, but Bitcoin enables global transactions without banking friction. All you need is a smartphone with an internet connection, and Starlink already enables a reliable internet connection anywhere on Earth. This backdrop and emergence positions companies willing to take the leap as innovators in the space. It's a strategic asset protection, growth, and a gateway to the next iteration in finance and the way we conduct trade and commerce. What started as one bold move is now a credible corporate strategy, and the trend is only gaining momentum. Now, it's one thing when companies buy Bitcoin, but it's another when governments do. This isn't just about El Salvador anymore. In the US, Texas is leading the way. Lawmakers there are making Texas the most crypto-friendly state, even exploring holding Bitcoin in state reserves. The logic here, financial independence. As federal debt rises to $37 trillion and beyond, and the dollar continues to erode, Texas wants a buffer for its citizens, and holding Bitcoin is a statement. Texas will have its own store of value, no matter what happens in Washington. On the federal level, the conversation is somewhat cautious but real. The US government already holds seized Bitcoin as their reserve, but now there's talk of a deliberate strategy. Some argue the US must have a stake in Bitcoin to maintain global financial leadership. It's a matter of national security. Money has always been a tool of state power. Bitcoin challenges that monopoly. The fact that parts of the US government are considering embracing it is truly quite significant. They realize they can't stop this technological wave. They need to ride it. Texas is the first ripple. A federal move would be a tsunami, changing the global financial landscape. The game is evolving rapidly and governments know it. The question is, who will adapt first? Why is this happening now in 2025, you might ask? It's a perfect storm. First, inflation. Prices are soaring and money buys less. Companies and governments want a safe place for their wealth. Second, global instability. Trade disputes and political tensions make relying on any one currency risky. Bitcoin is neutral. No country controls it. Third, technology. Bitcoin has run securely for over 15 years. Now, regulated exchanges and custody solutions make it easy for big players to buy and hold safely. The infrastructure is ready. Barriers to entry are gone. Finally, optionality. The future is uncertain. By holding some Bitcoin, companies and governments buy a call option on a different future. If the current system holds, they lose little. If Bitcoin goes mainstream, they're ahead. It's a low-risk bet with a huge potential payoff. In a world of radical uncertainty, it's the smartest move. The tools are here, the risks are clear, and the opportunity is massive. That's why everyone's making the shift now. The window to act is open, but it won't stay open forever. The race is on. The move to hoard Bitcoin isn't just a trend. It's a crack in the foundation of the old financial system. For 80 years, the US dollar has been king, giving America global power. But Bitcoin's rise is a direct challenge to that order. Unlike cash, which can be printed endlessly, or gold, which is hard to move, Bitcoin is digital, scarce, and borderless. It combines gold's limited supply with the speed and flexibility of the internet. For companies, it means global business with less friction. For smaller countries, it's a way to store wealth beyond the reach of bigger powers. The world is moving from a dollar-dominated system to a multipolar one. Dollar, gold, and Bitcoin side by side. This shift will change the balance of economic power. Early adopters will gain influence, laggards will fall behind. Central banks will have to compete with a form of money they can't control. The very definition of money is being rewritten. We're witnessing the birth of a new, decentralized, digital financial order. The world is changing, fast. We're at a crossroads. The era of government-controlled money is splitting. The decision by corporations and states to add Bitcoin to reserves is the first step down a new path. The old system isn't providing the security the world needs. The most powerful players are hedging their bets. What happens when hundreds of corporations, and even nations, hold Bitcoin? These scenarios are no longer hypothetical. The implications: a massive wealth transfer, less power for any one nation, and a more stable or chaotic financial system. The status quo is unsustainable. Change is coming. The story of Bitcoin is now about building a fair, reliable financial system for the 21st century. The hoarding we see today is just the beginning. The future of money is being written, and Bitcoin is holding the pen. Don't forget to like, subscribe, and share this video with a friend. Thank you very much for watching. Stay tuned.